What's up, Courtney? Get the screen on. There we go. Barty, what's up, man? Irfan, I see you guys. What's up, everybody? What's up, Sam? Give it a few minutes, guys. Let people come in. I think we got a good Sunday prep lined up here, and should have a pretty exciting week ahead. What's up, Roman? Travis, yeah, I know all about Bookmap. I don't personally use it. It's not that I have anything against it. I just honestly have like all the tools I really need. I have looked into it. I know a good friend of mine, Jay Trader, he is big about it, and it's like any other tool. Like if it helps you, then more power to it. But you know, at a certain point in my trading, you know, like less is more. Honestly, like I've tried a lot of different things, and that's what I would expect, or what I would encourage everybody to do, is try everything and then figure out what works for you and get rid of everything else, guys, because less is more. You guys talking about some Bollywood stuff. I don't know about no Bollywood stuff, guys. I know High Trader can teach me. You guys send me some links and maybe I'll check it all out. Netflix isn't on the list today, but I can take a look at it and give some thoughts. We're going to talk a lot about just general market stuff too, guys. What's up, Dino? Verdi, Coho, welcome everybody. You can get poutine in the States, but I think mostly in the northern states. I miss me some poutine, guys. I'm a Canuck, if you didn't know. All right, guys, let's get this kicking. Welcome everybody to Sunday Prep. This is what's the date? The 23rd. January, so it's what, is this the last trading week of January, right? First week of first month of 2022 about to get closed out, and it's been a crazy month, right? Like I think there'd be no debate about whether or not January's been nuts as far as volatility and just the overall broader market. Real quick, make sure you guys are subscribed and turn on notifications. It's the only way you're going to remember to check out the midweek watch that Goose has been doing, guys, because it's at 8:30 Thursday mornings, market time in the morning, guys. Pre-market. It's like it picks up where I leave off, right? So I'm trying to give you guys ideas for the beginning of the week, actionable ideas, things to be watching for. And then, we get through Monday, Tuesday, Wednesday, and we still got Thursday and Friday. And I can't give you ideas for Thursday and Friday always, because it's really tough to know anything about what the market's going to be doing that far in advance, right? We're not here to make predictions. We're here to make if-then statements. So that's where my brother Goose comes in. He's 8:30 in the morning on Thursdays, and he drops a ton of actionable ideas that are absolute gold, guys. So turn on the notifications so that you don't have to somehow remember on your own. You'll be notified. My broker of choice, guys, Cobra. Amazing broker. If you use the link in the description, you get 25% off the commissions. I'm telling you, that adds up a lot. They got the best friggin' locates, and you'll get your first month of the platform free as well. So I use DOS. You can use Sterling, DOS. I think Cobra has their own platform. But yeah, Cobra is the best broker for me, and I would recommend them for you guys. Spike Heat, guys. If you guys want to create an idea in your head and test it out, like to see if there's actually an edge in your idea, you need historical data to get a large sample size, unless you want to just track everything by hand and start today and just move forward. Spike Heat is the way to get that shortcut, and it's well worth the money. I can't recommend these guys enough. The product they make is insane. And last but not least, guys, Scripts to Trade creates scripts for traders for Thinkorswim, TradingView, and I believe they may be looking into creating scripts for NinjaTrader and whatever other platforms are out there. And I'm telling you, some of the tools are extremely, extremely powerful. Here's a look at one of them. That is the abnormal volume indicator, and I'm telling you guys, that's just one of many crazy indicators they make that are custom. And if you have an idea that you want made, they'll custom make one for you. Look into them, guys. I can't recommend them enough. Now let's get into you guys saw the title of this Sunday prep, right? The path of least resistance. Why would I want to talk about that? Well, if you guys want to make things as easy as possible on yourself in your trading career, one of the easiest things you can do to change the amount of ease you have is stop fighting the trend. So I know this is going to be confusing to some people because a lot of people that follow us or are in True Trader or just are mean reversion traders to begin with are going to be like, wait a second, how do you be a reversion trader, a mean reversion trader, and also go with the path of least resistance? Well, it's really simple. You can short something that is overextended but is in an uptrend. Yes, it's possible to do it, and yes, you can do it successfully, but it takes a lot more nuance, a lot more skill than it takes to short something that's in a downtrend on the larger time frames and then spikes, or vice versa, right? If something's in an uptrend on the bigger time frames, when something flushes emotionally, you can buy it as a mean reversion trade and still be taking the path of least resistance. So it's as simple as understanding what the path of least resistance is, and that involves understanding time frames and which time frame's in control and which time frame we're extended on. And those are things that we talk about a lot over at True Trader. And I want you guys to understand that when you figure out what the path of least resistance is and you decide to go with that direction, you're going to find more often than not you have the wind at your back and the trades just work that much easier. And vice versa, right? When you try to fight that, sometimes it will work, but you're always going to be going against the current. And I'm not trying to say one way is wrong or right, but one way is definitely easier. And I'm trying to open your guys' eyes to seeing that. So Yes, I will. Like, I mean, a lot of times you guys know when we talk about the, let's just use overbought reversion setups, a lot of times those are stocks that are in uptrends. But the thing is the trend, the bigger trend, the daily time frame, or even if we're looking at the weekly, is usually really, really extended. So that gives us the ability to understand that there should be a reversion, as opposed to something that is not extended on the higher time frames, and then you're trying to short it. I've seen way too many traders get eaten alive by trying to fight the trend. Understand that the trend can continue as long as it's holding the support of that time frame. And you guys have by now have heard the cliche that the market can stay irrational longer than you can stay solvent. That's where that comes from, guys. It's from people fighting trends, and the trend can just keep on going until the author decides to change the story. So really just wanted to hammer home that point, and you will see it a lot. We're going to talk about it a lot when we get into the actual ideas, and that is, the path of least resistance. So one last thing I did want to talk about, guys, is there's some ideas in my list this week that report earnings this week, and the ideas that I'm talking about are not in regards to their earnings. So let's say here's your earnings list for the week, guys. You see Apple's in there, Tesla and Apple are both on my list, right? Tesla's Wednesday, Apple's Thursday. The ideas that I'm putting forth are completely negated if they don't happen before the earnings. These are not something that have anything to do with the earnings. So I just wanted to clarify that. And none of the ideas I'm going to put out are earnings plays. I've done a whole webinar on preparing for earnings. In fact, I will have High Trader can put it in the chat if he finds the link for that, and we'll put it in the description of the video so people watching this at a later time can actually find that webinar. Because you guys should understand how to prepare for these earnings. There's a lot of them coming up, a lot of really big names, and they usually give us a lot of really big trades. What I will say about earnings, though, is with the market where it's at, and you'll see right now because we're about to get into the broader market, which is always the first thing we start with, right? With the market where it is right now, one of the things I'm looking for on earnings is, do these big names that everyone loves knock the numbers out of the park and still get sold off, especially if after hours they pop and then it just gets sold? What I would think about that would be that a lot of people are using it as their kind of get out of jail free card because they think we might be going lower. Now, I'm not saying we're going lower, and I'm not saying they're going to do that. It's just something I watch for, guys. So make sure you understand that concept as well. With that being said, let's get into the disclaimer. Guys, neither I, True Trader, nor any of its representatives are registered as security broker dealers. I'm not a licensed financial advisor. Trading is risky. Make sure you understand that everything I talk about none of it is a solicitation to buy or sell a stock. It's simply for entertainment purposes only. All right, guys, let's get into the broader market. We'll start right here. This is the ES, the monthly chart, guys, and I don't think it's any surprise, right? This is the ugliest monthly candle we've had in quite a while. Do I think the sky is falling yet? No, but if you've been paying attention to these Sunday preps, I constantly talk about it's more of a thing where there's red flag, and I'm looking for a few of them. I need to see certain things happen, and then I'm looking for dominoes to start falling. So there are red flags out there. I mean, that's an ugly monthly candle, right? And what I want you guys to understand is that if we are going to top in the broader market, if we are going to have a correction, do we not have the ability to go back to historical times when we had a correction and see what were the signs? Like, we totally have that ability, guys. It's not very difficult for me to drag this back to 2008, 2009 and say, look, this is what the monthly chart looked like the last time we had an actual bear market. And you'll notice, what's the first thing I see when I look at this chart? Well, we lost the monthly 20. And once we lost the monthly 20, we started look, it's not like we just went straight down, guys. We pulled back, and what have I always said? It's not the pullback that I care about. It's what happens after. And what happened after? We tried to push up and ran right into the underside of the monthly 20 and rolled over. Okay? So, and then we look, let's go back a little further. Now you got the 2000.com, the 99 2000 tech bubble pop. That was the other bear market, right? Same thing. Lost the monthly 20, tried to push up, ran into the underside, rolled over. Lower highs, lower lows. Path of least resistance. You're going to hear that a lot this Sunday prep, guys. Look, now, the difference now is we are actually extended from the monthly 20. So, we have room below, and, you know, I am not here to make predictions. I'm going to say that a lot too. For all I care, there's always three scenarios, right? We can try to go higher, we can roll over, go lower, or we could go sideways and build a base. There's definitely key support right here, guys. This line here, let's call it was October's lows were 42.60. Okay, so 42.60 is going to be a big level. I'm going to be very interested in what happens at that level. Now keep in mind, this is a monthly time frame, right? So the exact same thing I'm talking about with the monthly time frame, we need to be looking at what is the weekly telling us. So let's look at the weekly chart. And again, now we can go back to, let's go back to the great financial crisis right here, guys. Look what happened. Lower highs right here, rolled over. Tried to rally. This was that rally we just pointed out on the monthly chart, okay? Tried to rally. And this was actually a legit long trigger, you know, and it stuffed. It's not the pullback that matters, it's what happens after. So when it fails to rally and then rolls over, that is the trend telling you where the path of least resistance is. It's all our job is to read it and to go with it. And not fight it, guys. So what's happening right now with the weekly? We are below the weekly 20. So what do I care about? I mean, as long as we just keep coming down, the more we come down without a big rally, the more the path of least resistance is actually to the upside. I want to repeat that. The more we come down without a significant rally, the more likely the path of least resistance becomes the upside, even though it's only for the near term. So I'm definitely watching this 42.60 level. You have the weekly the weekly 50 right there. At what? It's 43.90 current. No, 43.41 currently. I'm watching to see where the bulls make their stand, and then I'm watching for the rallies to find resistance or to actually, you know, do something that resembles productive price action. You'll hear me say that all the time too. What do I mean by productive price action? It's not like we have to go straight back to all-time highs, guys. But if we rally and then pullbacks start to make higher lows and then we curl, we may end up getting the leg up. Now, I'm not here to say one way or the other. I'm just making if-then statements so that I'm prepared for every single scenario. So the lower we go without a bounce, the more likely I think that we're going to get a big rally eventually. So in terms of the Sunday prep, guys, I am definitely interested in long ideas this week, even though they are just for short-term bounces. They're not, listen, as far as swings go, I've been moving my long-term positions, or at least my long-term accounts, to more of a cash position so that I can be sidelines with fresh powder for if we go lower, okay? Now, one of the things I want to point out is that you don't have to catch the bottom of a bear market. If we ever go into a bear market, guys, you don't have to catch the bottom. In fact, the same way we just went and looked at the 08-09 bear market and the 2000.com bubble popping, the same way we just did that to see what were the signs of a top, go and do that and identify the signs at the bottom. And you'll see that you clearly don't have to be the first one in. So when I say I'm getting cash on the sidelines for if that ever happens, it's not so I can buy things on the way down. You will never see me putting my long-term investment account to work until I see what I need to see for me to know that there's possibly a bottom in. All right, so let's move into the daily chart so that we can see some of the levels that we'll be working with throughout the week. Guys, and this paints that picture so much more vividly about the path of least resistance should be to the upside near term. Okay, look at how far we are below the daily 20, and then go back historically and look and see how often we get this far away from it. It's not very often. Okay, let's actually, I want to go look and compare it to March. Okay, so in March, yes, got pretty far. Down here was different, right? Down here was the pandemic. Here was where it was like, look guys, yes, maybe we're going to roll over and have some form of correction, but the longer you go down without a significant bounce, the sooner the path of least resistance is to the upside. And you'll see you got a big rally and then it rolled over. Okay, so that's exactly what I'm looking at here. This has been down, 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 down. Dude, I want nothing more than another day or two of just fear and capitulation and no real bounce. And there's going to be some names out there that I'm super, super interested in for longs to catch that day when they have that big green rally. So obviously that 42.60 level from the October lows is a major spot for me. Depending on where we open though, we don't know what's going to happen, right? So maybe we gap up. If we gap up, I'm interested in Friday's lows as the first level of support, guys. Because if we've already got so extended to the downside that the path of least resistance is already to the upside, if we gap up, then I want to buy flushes risking Friday's lows so that I can possibly jump on that train to be on that big green rally day. Okay, I could be wrong, and it's okay because I have defined risk, which is an important concept, guys. I can put trades on risking Friday's lows because I know what my risk is. So that's another thing you guys have to understand is risk management always has to be the number one thing. Number one, not number 2, 3, 4, or 5. Number one. So to the upside, if we get that big rally, remember guys, once we do rally, there's going to be a lot of overhead resistance. The first level I'm looking at is the weekly 20, which is going to be right around this monthly pivot. 45.65-ish, let's call it. The monthly pivot is 45.67. Above that's that 4,600 round psychological level and the quarterly pivot. And again, that's more of an area, like a range. Anywhere in there, I'll be looking for like the momentum to fail, stall out, and start to roll over again. Because if we get that big rally and it runs into resistance, there's going to be shorts as well. If we get through that area, the next area of resistance for me is going to be this 46.50 area, which is going to be up into the 50-day, and depending on how many days it takes to happen, should be right up into the underside of the daily 20 as well. So that's the game plan with the S&P. This is the ES futures. You guys can use the SPY if you prefer. Let's take a look at the NQ. Again, here's your monthly. Now this one's a lot uglier so far, but we've slammed right down into support of what is that, October's lows, right? So I'm very, very interested to see if the lows we just put in hold. If they don't, 14K is probably on the docket, and that's fine. The exact same thing holds true what I was saying about the ES with the NQ, guys. So here's the weekly. Now this was much clearer, the short, when it came through, right? When we had that lower high and then lost that level, that was a big short trigger. But the thing is that it did what it was supposed to do. It took it straight down. We're right into that support. Again, I'm going to be interested to see if October's lows hold. If they don't, we're going to be looking for that 14,000 level. Let's go ahead and just jump right into the daily. And again, the lower we go without a significant bounce, sooner or later, the path of least resistance will be to the upside. And when it comes, I want to be prepared to really, really, really capitalize on that, guys. Now, when we bounce, just like the ES, there's a lot of levels. Now, we're below the daily 200 here, so kind of have to think that there may be some struggle on the first attempt to reclaim the 200. So for that reason, the 200 with that 15K psych level is going to be my first level of resistance I'm looking at. After that, we're going to be looking right up in here into this 15,575-ish to 15, let's just call it to 15.7. I mean, there's a lot of stuff up here, guys. Here's the problem. When we start rolling over and breaking all kinds of support, it becomes a challenge to really start pushing again, because now there's a lot of overhead supply to chew through. And that applies, you can take that concept and apply it to any individual name too. You can look at ETFs and look at the same thing. Right now we're looking at an index, so just understand that these concepts, it's all about supply and demand. And when you start, bagging a bunch of longs that didn't obey their stops and, they're all underwater, when things come back up to levels, you have shorts knowing that that's the case. They're putting on positions. You have longs trying to bail out of positions. It's just, there's a lot of things turning that create the levels that you end up seeing in hindsight on your charts, guys. So yeah, there's a lot of overhead up here in that 15.6 to 15.7, even 15.8. The 20-day would be great if when we spike up to this 15.6 level, if the 20-day is right there as well, it's going to be a pretty high conviction level for me. If we flush down, that 14,000 level is the first level below where we're currently at that I'm looking at support. And then you got the monthly 20 down there at 13, let's just call it 13,500. So there's your tech sector kind of outlook. Let's jump into crypto, and I'm sure a lot of people are going to be interested in this one. Guys, let me get a drink of water. I didn't really tell anybody, but I got COVID on Friday, and I'm starting to feel a little bit better, but my throat is really bothering me, so I'm trying to just get through this, guys. Yeah, so Bitcoin looks really, really ugly at the time of recording this, but I don't see any reason to be stepping in here, because it's kind of in no man's land. It's either a pop back up here to 42,000, where I think you end up seeing some resistance, or a flush down to the 28 to 30K level, where I think it's expected that support's going to show up. So it's really kind of in no man's land. Again, I don't trade it, but I am just watching it because I trade the equities. But if we come down and test those lower levels, like the 28,000 to 30K, I'm going to be interested in bounces in the equities that are related to cryptocurrencies. There's a lot of them that are really getting to some levels where they should be due for a bounce as well. But keep in mind, make sure that you understand what it is that the company does, because there's some companies out there like MSTR whose valuation directly relies on the value of crypto, or Bitcoin to be specific. Whereas you have others that, that's not like how their whole business is valued. Like some of them just have mining farms, some of them have other things to do in the crypto space, like Coinbase is an exchange. So like understand that some may be safer to assume a bounce than others. Okay. Yeah. Other than that, like until it either picks a direction to pops back into 42K or flushes down into 28 to 30,000, it's in no man's land for me. The one other one I wanted to point out was Russell, was that last week it finally broke down from this big old channel that we've been talking about. So, and he spikes back up into the lower parts of that channel. Should offer really, really good resistance and some short opportunities for any equities as well. Let's get into the sector analysis. So here's your barchart.com. It's kind of trying not to cover the whole thing with my face. Sorry, guys. I wish I could move this over here. But it's no surprise, right? Everything is just red. Remember, just because it got slammed doesn't mean it's a short. And just because something was green doesn't make it a long. You have to go and look at what is actually happening to the sector ETFs underneath those, right? So I wrote down, I took a lot of weeks, guys, when I do these lives, I just freestyle them. I'll look at stuff and just say whatever comes to my mind. This week, there's so much stuff I didn't want to forget. And because I'm sick, I just decided to write a lot down. Sorry, guys. All right, first thing I wanted to talk about was XLY, which is the consumer discretionary. You see this? That was the one that took the biggest hit last week. Let's pull up the ETFs and go through them, okay? Right here. So same thoughts as with the broader market, guys. It had a major short trigger on the weekly and the monthly chart, which I did kind of want to show you guys. So you see how it had that big lower high followed by the lower low, and then it rolled straight over. It does have more room down. When you get this setup, the target for me personally is the 20 SMA on the time frame we were extended. The time frame we were extended on when this triggered was the monthly. So the monthly 20 is way down here at 168.92. That's why you see I have an alert set there. And I am interested to see if we could possibly get down there. I don't know if we do, because it's just sold off so fast with no relief bounce. It might not get there, but I don't need something to get there for me to have a trade. Guys, I know how to watch the price action. I know how to look for the momentum to shift, and I'll be ready for it if it does, so that I can participate in that bounce. Remember, the only reason we look at the sectors in general is to see where there may be ideas where the money would be better deployed opposed to other sectors, right? So this was the one that got hammered the hardest, right? So, and we are super extended from the underside of the 20-day. So I'm very interested in names from this sector for those bounces that we're talking about, okay? The next one I wanted to talk about was the financial sector, XLF. And you'll see it was also very hard hit. The sector in general for the week was down 7%, over 7%. But keep in mind, guys, it's still in this channel that it's been in. And you know what's funny is I almost never draw these channels using the channel tool. In fact, I'll just draw a trend line, and then I had another one, and I was like, man, I wonder how close that is to being like a parallel line. And when I used the tool, I was like, that's actually very close to perfect. And I was like, all right, well, it is in that channel. It did get smoked. Here's the thing. It's right down into the 200-day. You know, it makes a lot of sense when the 200-day is so close to the bottom of this channel, channel. Did I say channel? This channel. The bottom trend line of the channel. For this to be like that high probability level for it to bounce. And let's see what I wrote down on here. Yeah, I think a lot of the names here are going to be primed for a near-term bounce. Remember, our job's not to predict. It's simply just to make these if-then statements. So it's simple, right? If financials hold the bottom of this channel, then I may be looking at some names for some bounces. If we lose this channel and fall out of it, then the thesis is broke and we're hands off. It's super simple, guys. And if you learn how to make these if-then statements, it will keep you safe. The next one I wanted to talk about was tech, XLK. This one lost the trend line, right? So pretty long trend line going way back to October of last year. But again, right down into the 200-day near-term rally I'm very interested in. Lots of tech names are sold off. Obviously, everybody's been talking nonstop about it, right? The tech sector has just been shellacked. I'm probably taking too long on these guys. I'm going to start speeding it up a little bit. XLC, this is your comm services. We've talked about this. This one is hideous as it gets, guys. Anything, you know, yes, it might be primed for a bounce. This chart looks so gross. This one actually looks like it's already went and started the bear market on its own. It's like, screw you guys, I'm leaving. And he pops back up into these areas are going to be high conviction shorts for me as far as individual names are concerned. I just want to read the notes real quick, make sure I'm not forgetting anything. I even made a note that there are, with a chart like that, individual names may even be viewed for swing shorts. You know, like I was saying, swing longs, hands are off right now. I'm going cash a lot. If you guys feel comfortable swinging on the short side, some sectors look more conducive to that. This would be one of them, okay? XRT retail, another one's just been absolutely hideous. Again, same thing as XLC right here. The problem with this one is that it's all the way down into the monthly 20. So it's already there. Like, this is just, it didn't wait. It was just, boop. That's an ugly monthly candle right down to the monthly 20. Never, listen, just because that's a target and just because that's where support should show up, don't ever look at that and go, oh, that it has to bounce there and it can't go lower. Never, ever, ever say something can't go lower. Never, ever, ever say something can't go higher, guys. All right. Yeah. So I listen. It's not a time to. I wanted to note that it's not a time to get greedy on any longs you take. So whether it's the retail sector or any other sector that you think is really sold off, if you catch that rally day and you get a big move, I'm not this isn't the type of market environment for me to get greedy and, think, oh, I'm just going to see how much further this can go. I'm going to be quicker to take my gains and just move on, find the next idea until things change in the market, right? And that may stay that way for a while. And it is what it is, but there's still money to be made. And if you just understand the market environment, it keeps you focused on what type of trades you should be taking and what type of time horizon you should be using on your trades and your ideas. XBI, I still think exactly what I said last week holds. I still think this one is probably one of the most oversold in general for the whole sector, and it eventually this is going to have a humongous bounce. But if you recall, we were talking about last week. Let me look at the weekly chart here. Hold on a second. Here's the weekly. Remember last week we had seen this tail form on the weekly candle, and I literally told you guys the if-then statement, right? We watched last week's candle now, but you watch last week's candle to see, does it also show some support and some buying coming in, or does it roll over and make another ugly candle? And the reason I highlight that is because if you do that, then it keeps you out of these trades. We're right back to, all right, we're stalking it. There's nothing here yet to say put your money at risk. It's all about capital preservation, guys. But I still think the lower this comes, the higher the probability that we're going to get a big sector shift in the biotechs. If you guys understand how to look at book value and look at the cash on hand for some of the companies involved that are biotech companies, there's a lot of companies that are trading with a market cap less than their cash on hand. So like, you guys can find some diamonds in the rough out there and then wait for the sector momentum to shift and already have that shopping list ready, and then boom, money in the bank, guys. And the last one I want to talk about was energy and oil. Obviously, as a whole, they both still look really good, really strong. They're just making their pullbacks and they're staying in this uptrend, right? You have to understand, this is a weekly chart, right? So this is actually almost a year of uptrend in energy and oil, and until that changes, these can continue higher. And, it's kind of funny to watch all these other sectors just burn to the ground while these two look absolutely amazing. Where is? I thought I had notes about utilities in here, but it's okay. I can just pull it up real quick. Utilities still look pretty good, right? And certain sectors perform better in certain parts of the market cycle, right? There's early cycle, mid cycle, late cycle, and then recession. And so later in the market cycle, the market cycle, the things like utilities start actually performing better, and so does a lot of the defensive sectors, and the growth stocks start to perform worse. And that's exactly what we're seeing. So make sure you guys understand some of the signs, okay? All right, that got a little bit long-winded. I apologize. We're gonna move straight up into the ideas now. You know what? We're just gonna type them. I'm not gonna pull up the watch list. First idea, we're gonna jump into the long ideas, guys. Remember, there's two types of long setups I look for in these Sunday preps. One is strong stocks where I'm looking for continuation. The other is when they get oversold and I'm looking for a reversion setup. So what we just covered, right, should be like a light bulb moment. There's probably not a lot of names in the strong stocks looking for continuation, but there probably is a lot of ideas in the oversold looking for that reversion trade setup, okay? So the first one we're going to go over is part of the strong stocks looking for continuation, and the name I'm looking at is Morgan Stanley. Remember, guys, financials, if-then statements. If financials can hold the bottom trend line of that channel they're in, then there may be a bounce. We're coming right off the 200-day for the sector. Oh, another important thing to note, guys. I feel like maybe I haven't made this clear, because you see me talk about sectors as if, you know, if the sector does this, then these individual names might do this. Make sure you understand that it's not the tail wagging the dog, right? The sectors react because of how the individual names act, not the other way around. Okay, so just because I'm looking at a sector for a level to hold or whatever, it's not like I'm going to go, look, XLF is bouncing off the 200-day. We're going to go long all these financial stocks. No, it's going to bounce because the individual financial names are catching bids and going. So make sure you understand the way that relationship works, guys. Morgan Stanley. What is the notes I wrote down? Let's just get into this, guys. Over Friday's high day, and I'm looking to join trend. I believe, okay, so this idea was not based off the daily chart. That's why. Boom. So here's a 5-minute, guys. So, you know, I think the daily chart looks pretty good. I like the sector. I like the name, the range, the liquidity. And, you know, we pushed up, we pulled back. We really held this level really well from, you see this consolidation area back on the 19th. Held that level, and then we pulled back. And so it's an if-then statement, right? If we take out Friday's highs, then what do we have? We have a low, a push up, a higher low, and then a higher high. And 102s would be the first real target, right? It's not like I wouldn't lock in some into psychological levels like the 100, you know, and I'm not buying it on the breakout. Let me get that straight too, guys. I'm not buying this as soon as it breaks 99.60. I'm waiting for dips to add or to start in and see if trend holds, because if a trend develops, I can ride the trend. I'm not just chasing and buying breakouts. If you guys start buying breakouts in a market that is possibly topping, you could be in a world of pain, guys. We need advantageous entries, okay? So over Friday's highs, I'm looking to buy dips with defined risk under these lows right here. We'll just call it 97.70, okay? And then looking for this thing to push 102. And in my eyes, guys, let me see if I can get back to the. If we break 102, next stop would be up here 106.50. I don't think I'm gonna be around for that, because that would most likely entail it being a swing. I'm not in the mood really for swing longs, guys. Now, if I lock some in at 102 and it keeps going and you get one of those crazy big green days, then maybe we get there. But I'm just pointing it out, like, you know, the same way over Friday's high is a trigger, so is over 102, okay? Like, check this out, guys. This setup, what I'm looking at right here, is the exact same thing that you're seeing on the daily, okay? The pullback, the push up, a higher low, and then a higher high. Look at the daily chart. Push up, higher low, break over that, higher high, gone. Okay? Learn that setup, guys. The next on this list is ExxonMobil. And again, sector is important here, guys. I'm not trying to join trend on stocks that look strong in sectors that look weak. Okay? So for this section, I want these names to be in the sectors that I like. Now, we are extended from the 20-day. That gives me concern. But I feel like risk is defined here, okay? What I write, Friday bounced convincingly off the 71 area. I'm looking to buy any weakness in the 71.38, which is that annual pivot with risk under Friday's lows. I think, again, this is one of those ones. Yeah, let's see. Yeah, I like the way that this flush down held these levels. And so basically I'm looking to buy a dip back down here, 71.30s, risk under 71, and see if we catch a runner. That's as simple as it can get with XOM, guys. All right, so like I said, not a lot of ideas from this sector. Hold on. Thank you guys for bearing with me. Oversold reversion setups. This is where the money is for me this week because of where the market's at. And remember what we've been saying, path of least resistance. Keep going lower. Eventually that path of least resistance is going to be out, and you're going to get a big green day. All right? Now, I made a note in here, and I think it's kind of funny. I literally said, let me see if I can pull this chart up. I don't know what. Guys, hit up TradingView and ask them why when I type in YNDX, I have to pick that I want the NASDAQ, because if I just hit enter, it picks, I don't know what MOEX is. I don't know what country that is. Russia or something. I have to pick that I want the NASDAQ. I think that's silly. If enough of you guys write in, maybe they'll change that. Anyway, what I wrote was I could pull up 100 charts like YNDX and spend time talking about them this week. But I think, you know, there's going to be a lot of opportunities on names that are going to be better targets because they're the recent bull market sweethearts, right? There's a lot of names, like, dude, when you have, like, you can almost take your pick of names that are sold off and oversold. Let's focus on the ones we know big money is going to be most interested in, right? So for that reason, I'm going to start with pointing out something about a sector that was hot recently. Semiconductors were really, really the last sector to finally fall in that long domino effect of sectors falling. And so if you look at SOXX, this is the ETF for semis, right? And so we're coming down into the 200-day on that, and it's really oversold. And we know that big money loves some of the names in this space. You got NVIDIA, AMD, MU, AMAT, MCHP. There's so many semis, TSM. Some of them were just doing phenomenal, and then they just got smoked because of the market, right? So, I mean, AMD looks good. NVIDIA looks good. But how do I pick which one I want? Well, I want the ones that look like they've sold off the most and are the most extreme. I'm going with MU, guys. Look at this name. Look at this sell-off, and look at the level it's coming into, okay? Let's see, what did I write down? I guess I didn't make notes about them individually. I'll freestyle this, guys, because it's simple. It's plain as day. You can see the lows here in the mid to high 80s, 80, 60 to 80, let's just call it 81, is going to be a huge, huge level for MU. If it flushes and loses that level, I may just add right into the 200-day because the weekly 20s right there as well in that 79.80. We're not talking about a huge distance right there. You could scale into that. I'm not really trying to catch the knife on it anyway. If it flushes emotionally, I'm just going to be ready to watch for what I need to see for those sellers to exhaust and the buyers to be stepping in, because when this reverses, I think you're going to get a really big bounce. Intraday and possibly even multi-day. This thing is just, it's been crushed, and it was a beautiful looking chart right before it got crushed. I think this is overdone. I think it's going to give a really big bounce. AMAT is the other one, and it's the same for me, guys. This thing was looking really good, and it's gone from 167 down to 135. Please, 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 the lower the better. This thing comes down, like, the first level I'm looking at, it's pretty obvious, guys, is that 132.68 is the quarterly pivot. Remember, there's the chance we gap up tomorrow, and these things gap up too. And if that happens, I have no problem buying an early morning flush with risk against Friday's lows, all right? So if-then statements. Be ready for all these different scenarios. If we gap up, you need to know what you're doing. If we gap down, you need to know what you're doing. If we open flat, you need to know what you're doing, all right? So if we gap up, I'm buying a flush with risk against Friday's lows. If we gap down, I'm looking for 132.68 if it's still an emotional flush down. Remember, this is a 7.5 point ATR, right? So this is probably pretty close. The other level is going to be, obviously there's no pivot down here, guys, but 125, psychological level. We get down to 125, bring it to me, baby. I'm telling you, the lower the better with no significant bounce. Eventually the path of least resistance is up. Okay, so that's the two chip names. I'm telling you, you can play NVIDIA, you can play AMD. Institutions will be buying that stuff for the bounces. Just know what you're looking for. Know why these ones are on my list and the other ones aren't. Okay, the next name, Microsoft. This name here is obviously, dude, if you can't buy Microsoft on its first test of the 200-day when it flushes down and gets real ugly like this, then go find a different profession. This is, you have to understand that the first test of the 200-day, even if it doesn't work, even if it goes right through it like butter and falls and craters to the ground, you still have your risk management to keep you alive. You should have a predefined amount of money you would risk on a trade. So, but if you see something like Microsoft flushing down into the 200 day and you're too scared to put some capital at risk, dude, this might not be for you. I'm ready to buy this at the 200 day. If it doesn't work, so be it. There's levels below I'm just as ready to get. Now, if we lose the 200 day, the problem with losing it is that I'm probably not interested in getting it until low 280s, like 280 to 282. Again, if we gap up, I could see myself buying this. I don't know if I like Friday's lows the same way I was talking about MU or AMAT. Maybe the quarterly and the monthly stack pivot right there. I really want the 200 day, guys. I'm just gonna say that about Microsoft. Apple's the next one. You guys noticing a trend here? These are names that when big money decides to start buying, it makes sense that they're gonna go into these names. All right. And how often do you see Apple have sell-offs like this? I mean, dude, this could be a gigantic opportunity to put. And there's no amount of size you can take on these names. It's too much. Like, no, you're not going to buy enough shares of Apple to influence the price action. You're never going to feel like you got stuck because it was illiquid. Like, these are the names, when they offer those A+ setups, strike. Swing Thor's hammer, guys. 158.64, annual pivot. It's also the weekly 20. I literally wrote in my notes, it's funny, it says time to put your nuts on the table, guys. All right. Hopefully you guys understand the idea there. Flush down to that area. I'm a buyer. I don't want this one to gap up. Like, honestly, like, we don't have control over what happens, right? I already have established that I like MU and AMAT. Even if we gap up, I'd buy those risking Friday's lows. I'm not a big fan of buying this one risking Friday's lows if we were to gap up, say, 165-ish, 166. Here's the thing. I honestly can't... When we close at lows like that on something like Apple, I feel like it gaps down. I mean, I'm not trying to make a prediction, but when I see something that closes on lows, I feel like there's more downside, right? Same way like when you see something close on highs, I don't really want to short that right out the gate the next day because I feel like it's got continuation written all over it. That's a little nugget from Goose, so thank you to him for, he talks about that all the time. Things closing on highs, that shows strength. You should be looking for continuation. The next idea on the list is Amazon, guys. And boy, oh boy, when was the last time you saw Amazon make a move like that? Now, it's a major short trigger losing these levels here. Let's draw a line. See if I can get it to draw accurate. There we go. So we lost a big level. So I'm hoping it capitulates lower. I don't know if it will or not. Again, not trying to make predictions. It's just if-then statements, right? The thing about Amazon, guys, is that you know what? I actually missed a name this week. I have to go circle back. I didn't put it in the list, but I'll get to it. Amazon, guys, is such a pricey name that instead of like trying to express this trade idea in the equities, I'll be buying calls if this thing has an early morning flush and shows some support, because this thing will offer a bounce, but in order to actually capitalize on it with enough size, you would have to have probably some options instead of just equity on it, depending on your account size or whatever. But to each their own. Did I write a level on it? Let's see. No levels. Yeah, these names, guys, lower to better. Know what to look for, know how to spot when sellers are exhausting and when you can actually step in and actually put capital at risk with defined risk. Okay. And so back to the name that I had skipped. It's ASAN. I think I just forgot to space it out on my note sheet, and that's why I didn't see it. ASAN is coming into a really interesting level down here. 42 is what I'm looking for. It's going to take some capitulation. I need it lower, but again, I like this name for a bounce if it comes down here. This one has a billionaire CEO that just keeps on buying hand over fist. That dude he's martingaling into the position like a psycho, but I'm willing to see this thing try to bounce from 42, 44, wherever I see the sellers exhaust. So that's it for the long ideas, guys. Remember the concept And I'm telling you right now, if you guys understand the way I come up with the ideas, you will be able to find these ideas yourself without mine. And by no means are these the only ideas that you could trade this coming week with the same philosophy. There's so many names out there, right? So take what I teach you and make it your own, okay? So let's move on to the shorts. Now first section is weak stocks looking for continuation. The first name on my list is TTWO. And the reason I'm looking at this is this has already had that big bounce and it's right back into the levels of resistance. And look at Thursday, and actually you can look at Wednesday, Thursday, and Friday, those tops, those tails, right into the weekly 20 and the daily 20. This thing is, I mean, it looks like it's trying to wave its hands at me like, short me, short me. So the way I'm playing it is either one of two ways. Let me get a different time frame up. So you'll see I've got this alert set. I want a break of Thursday's lows, and then I'm looking to short pops and join trend. Or if we spike up into this level up here is 166, let's just call it 166.50. If I'm not mistaken, it's just this level from Friday, right? So you see it was butting its head. There was VWAP there. It rolled over, made lower highs, and then it was done. If we slam back into that level, I may short the pop back up into that level and then anticipate that it rolls over. I'm telling you, the reason I have the conviction on this one is just the way those daily candles have been forming after this big move up into resistance, right? And in fact, all the names that I was just talking about for the long ideas, over the next week or so, if they pop up and push up into levels just like this and start doing the same thing, then they too will end up on a Sunday prep with me talking about them as short ideas, guys. So here you go. So that's the TTWO idea. Next idea is Tesla. Remember, guys, and remember as well about Apple. Apple reports on Thursday. Tesla reports on Wednesday. So this idea is dead in the water if it doesn't happen prior to Wednesday, okay? But I'm looking for a spike back up into 1038. It's your monthly pivot. It's right below the 50-day. You can see it was like we'll call it 1013 was a breakdown level. I honestly think this thing has 200-day written all over it. I think this big push up here was kind of like last chance to get out, guys. And then when we pulled back, made that lower high and then rolled over, to me, any pops back into this area of consolidation where you have this resistance, it's going to offer a really, really high probability, good risk reward trade. And again, I'm not looking to swing it. I think if we slam up there, you're going to get a really good trade. Even though I'm sitting here telling you I think this thing's got 200-day written all over it, there's just no way for me to, even if I think the market looks like a good market to swing short, I am never going to swing an idea into earnings, okay? So you have to understand. Now, earnings might actually be the catalyst to get this to the 200-day. I don't know. We'll see, okay? No crystal balls here. I don't need one. If then, that's my crystal ball. Next idea, Chewy. Oh, if I can spell. Chewy looks really, really, really dead. Again, a lot of these ideas are from the exact same scan. In fact, let me show you guys. Let's see if I can just push this up here. This is a Finviz screener. You guys can always just pause this recording and go and look yourself at the parameters. This screener right here is literally called short pops back into the 20-day. It's just five things, 5 pieces of criteria, guys. Copy them, and you'll see all these ideas are the exact same ideas that I talk about week in, week out on these short ideas about shorting pops back into the 20-day. They're weak stocks. They've lost their 200-day. They're below the 20-day. They pop back into the 20-day. They should offer a good short. It's very simple. So looking for 50. 50 is the psychological level. The monthly pivot's right around there. And the 20-day. Very, very simple. PayPal. Same idea, guys. PayPal. 179 to 180. This was a huge level that it was trying to hold, and I think people were buying this because they thought it was building a base for a possible push back up, because this is one of those names. It was a strong name. In fact, I was in a swing position on this. I ate my loss when we lost this base, and that's fine. now it's on my target list for a short. You can see we already tested the underside of this level once and it rejected. So any pops back into that level, I'm looking to short. DKNG, exact same idea as last week. Pop into the 20-day, I'm there to short it. 24 to 25, I don't know what the exact level is going to be, but when it spikes, if it can get a pop on some sort of catalyst, like some sort of headline or whatever, then it just becomes looking for that momentum to shift, looking for a lower high, something to risk against where your risk is completely defined. So that's it for the weak stocks looking for continuation. And the last section is overbought reversion setups. And guys, it should make a lot of sense to you by now. What do you think is on my list for something that is overbought and I'm looking to revert it? Probably not a lot, right? Think about it. What kind of market are we in? Is there a lot of stuff out there that's overbought? No, there's not. Only name on my list, guys, is Philip Morris. And honestly, the only way I care about it is if we slam up into the 52, I think, yeah, it's 52 week highs, guys, 106.50. I think it was the exact same idea from last Sunday prep, and it just didn't get there. I would still be interested in it. We'll see if it gives it to us. So that is all the ideas for the week, guys. I'm going to go through the comments, the questions and stuff, and see if we can get some questions answered real quick. And then I've got a very important football game to watch. Ricky, yep, I already answered that one. Hold on a second. Very interested in analysis. Yeah, somebody wanted me to talk about Netflix. Guys, Netflix got destroyed on their earnings. So, here's the thing. Remember, path of least resistance currently may be to the upside on some names that are oversold. But I don't necessarily care too much about a name like Netflix that got smoked on their earnings because I think a lot of people got bagged on it. In fact, keep in mind also that when I say the path of least resistance will be to the upside, that is for the near term. I think at this point, with the broader market where it is, when we get that rally, my job as a trader is to identify what happens after we rally. Do we make a lower high? Do we run into resistance and then start to roll back over? Or do we start to base, make some higher lows, do something that looks like maybe the bulls might be building out a base that they can push from? I'm thinking that we start to make lower highs and start to roll over. You guys got to think, right? There's some differences nowadays. Every other market rally, we still had the backdrop of Powell printing money nonstop, right? They've literally come out and said that things are changing now, right? Tapering's probably about finished, and eventually they're going to start tightening. That's different. Things have changed. I'm not here to cause fear and panic. That's not the job, guys. But we have to be objective. The only way to be objective is to look at the chart objectively. So when I see certain things on the SPY or the ES or the NQ and the QQQs, I have to look at it just objectively, black and white. Are we making lower highs and lower lows, or do we start to make higher highs and higher lows again? Because a trend can only go up if it's making higher highs and higher lows. We can't sit here and pray that a bull market continues if all the evidence points to the contrary. So just stay objective. Netflix, I don't want really to get involved in it. My guess is that, well, one, other than earnings, leading up to earnings, Netflix is just super, super illiquid most of the time. So for me, really not a trade. I don't know if the question asked about it was in regards to more of a swing or whatever, but I think I think it's looking really ugly for the name. Let's look at like higher time frames real quick. So yes, you guys remember this really long base that was built, finally broke out, built another really long base, broke out. What would have looked good for Netflix is for another long base and then a breakout. Instead, we're way back down here. That puts us way back to 2020. We just erased all of 2021, guys. So in my opinion, any pop back up into the underside of 500, probably a short. I just don't trade the name because it's just so illiquid. Let's see. Yay or nay on Bitcoin and Ethereum. I kind of gave my opinion on it. I think it's in no man's land. I think it needs to flush out further first if you are looking for some sort of significant bounce. If it does bounce from here and bounces straight up into that 40,000 to 42,000 level, I think it's probably a short opportunity, at least in the equity spaces that follow it. I apologize, guys. Let me look here. All right. Noting a question before I forget. Are things at pre-pandemic levels now potential buys? Example, DKNG. No. Not for me. And I'll tell you why. Because the pandemic, like where things were trading at before the pandemic, has no bearing on what's going to happen possibly with the broader market. And you guys, you guys all know this, right? I see some of the comments, right? You guys know, even when the S&P and the NASDAQ were trading near all-time highs, and they still are not that far off, right? Like in the bigger scheme of things, they're not that far off all-time highs, right? But when they were still trading at all-time highs, you guys know that all the equities that we care about and trade all the time were nowhere near all-time highs. You were like, how come the S&P is near all-time highs and everything I'm in is red and way off? You know, everything's taking 50% haircuts, right? So, you know, there's been things happening underneath the hood that if you're paying attention, even though the S&P's at the highs, still gives you, you know, your reservations. So I'm really, really thinking like, so, and here's another thing. If you guys are bagged in some stuff, make sure you have a plan for what you're going to do with those bags if you get that relief rally. Like if some of your names rally and push up into levels of resistance, are you going to just hope and pray, or are you going to have a plan? I'm not telling you one plan or another. I'm not saying you need to sell your bags or anything, because I'm not a financial advisor. I'm not going to tell you guys what to do. I am, however, going to tell you, have a plan. Know what you're going to do, if this, then that. Okay? So no, I don't think that just because something's at a pre-pandemic level that it automatically makes it a buy. I have my reservations about where the market's at right now. Isn't there a lot of bag holders though in these Bitcoin related equities? Yes, 100%. That's why honestly I'd rather they spike and fade them. Like Mara, Riot, please spike those up into resistance. Like let's look at a Mara chart. Dude, if this spikes to 30s, come on. I'm all over that short. Like, I'm 100% with you on that, Verdi. Same with, like, Riot. All these names, and listen, take that FinViz scan I just showed you guys, and you'll see these names on those lists, right? There's like 1,000 names could have ended up on this stupid short that pops into the 20-day list. I just picked the ones I thought were going to be the best for you guys. Have you seen the upper trend line off the decades-long yearly SPX log chart? Current market price is close to that trend line off the tops from 65, 68. No, but to be honest with you, I'm not a big fan of log charts. And that's just, I'm not saying one's not good and one is better or whatever, right? I don't do that. If you guys like using a log chart to see if it, but what I always feel like I'm doing, like let's pull up that chart. So here's SPX. And here's a log chart, and I'm not sure if it's going to work on the weekly, the trend line you're trying to say. He's talking about from way back in 68. Oh, there we go. It wasn't log. So here's your log chart. My guess is you're talking about, I don't see any trend line that I can draw where we're going to be close to that. Are you talking about the lower trend line? Because it says upper trend line in the chat. But I want to point something out, guys. If you're not using a log chart, right, you see what happens. So the reason I say that is because if you're trying to like get a trend line to fit or something, and it just doesn't fit, but then you go and like, oh, make it log or something, and then all of a sudden it fits, then you're kind of like trying to make something fit your narrative as opposed to just seeing what the actual narrative is. Now, maybe I'm just an idiot and I don't understand log charts that much. That's neither here nor there. I personally just want to see the charts for what they are. And honest to God, I say this every friggin' Sunday prep, but trend lines don't mean very much to me other than they're a guide, right? What means a lot to me is what the actual trend says via higher highs and higher lows or lower highs and lower lows. Because anybody can draw a million different trend lines, right? Like we could draw a trend line here, and if it breaks, then we'll just draw another trend line. If you draw on here and it breaks, you just draw another trend line. But there's no debate. Like we're not going to sit here and have a debate about whether something's making higher lows and higher highs or if it's making lower highs and lower lows. That's black and white. That's objective. That is something that I would put more weight in. So understand that the trend lines and stuff, they're just for visual representation and guidelines. That's it, guys. They'll show me areas of interest, but price action and trend, legitimate trend, tell me much, much more about the story. I hope that makes sense. The U.S. told their diplomats to start leaving Ukraine on Monday. Do you think we can go much lower, like March lows in 2019? I think maybe you mean 2020, KH. That was the March lows that mattered. And that was, I follow macro stuff because I just like to know what's going on in the rest of the world. But I don't ever put too much weight on what is happening in the rest of the world versus how it affects the market. Because honestly, sometimes the market knows better than us. There's a really good book you guys should read. It's The Art of Contrary Thinking. And it talks about how herd mentality is so often disproved by the market, right? So like everybody thinks one thing and the market does something else, right? And in the early part of the book, they use examples about how like the stock market almost predicted the end of World War II. Or like just how like when people think things are going to be one way, they end up the other way. And that's obviously the point of the book is to point out why you shouldn't think like the herd, why you should actually think in contrarian terms. But that type of book was what opened my eyes to like let the market guide me. Don't let all the news headlines and what everyone else is thinking guide me. Biotech, I don't understand why it is tanking. Should be less sensitive to the current macro trend. Irfan, I totally agree. Bios oftentimes perform pretty well regardless of the broader market. But you can't just say that they're tanking because of the broader market. The sector ETFs are going to be following the individual names in those ETFs. And, if those things all get sold off, think of it as an opportunity. Look for the names that have the cash and are trading under cash value. That's what I'll say. And eventually that sector will bounce. I need some water, guys. Hold on. Do you ever buy pre-market when it hits your level? I try not to nowadays. Nowadays, I'm much more interested in when we actually have liquidity and price action that's organic. Amazon looks like a falling sword. I like how you call it a sword and not a knife. Looks nasty even on the 60-minute. Short Amazon into 3,000, assuming market cooperates. So yeah, like all the ideas, guys, for the bounce plays can be just as good of a short if they bounce, right? So like if Amazon bounces to 3,000, that's the move I'm looking to capture. That's why it's a long idea for me, right? So remember, there's no right or wrong. I'm not here to tell you your guys' ideas are wrong. I want you guys to create your own ideas. If you're like, if I tell you I like Amazon for a long, and you're like, hey Ricky, what about a short in the 3,000? That's a good idea. Don't discount your idea because Ricky said long. No, in fact, you're probably spot on. I bet if the market bounces, and here's a good thing to do though. Keep an eye on other names in the sector, peers, and the broader market. And so if tech and the S&P are bouncing into levels of resistance, and then you also get Amazon coming into important key levels of resistance, you're going to get confluence. So make sure you understand to look for confluence as well, because it helps you time those entries. Thoughts on Facebook? I looked at it. Facebook looks pretty ugly. Coming right, is that the monthly 20? I think it is. Yeah, we're right into the monthly 20. Probably a good spot for it to bounce as well. Honestly, so many names this week, guys. It's on my list. Facebook's on my list. It's one of those names that's a darling. Institutional money will buy it up, but I just didn't want to have too many names on the list, guys. But yeah, Facebook looks good for the exact same ideas. And in fact, you have a key level right there, 300 psychological level, monthly 20. A lot of reasons that this should also be on your watch for a bounce play. Pep double top with selling candles. Let's check it out. Not typically when I trade, but yeah, I see it. I mean, definitely got those. That looks a lot like those candles from TTWO, right? Look at the difference though, guys. Pay attention to this difference. Look at where take two is in comparison to Pep, right? Pep is in an uptrend. And this is what I'm talking about. This is exactly what I'm talking about, guys, when I talk about path of least resistance. Pep is in an uptrend. So Pep, in order to put yourself on the path of least resistance, it's probably buying the flush back into support. It doesn't mean you can't short it, but it's still in an uptrend, objectively, right? This isn't debatable, and I'm not saying it's not a short, but compared to take two, which has gotten hammered, made a major lower high, then a lower low, and now popped back into resistance and showing those same candles, one of them looks a lot more attractive to me than the other. It doesn't mean one's right, one's wrong. I'm just pointing out path of least resistance, guys. Please learn that. Swing long for Tesla at the 200-day. I don't know. Again, I'm not really interested in swing long in anything right now, guys. Ricky, thank you for Sunday prep. Much appreciated. Can you explain your process on taking profits on PSX short from last week? How do you determine the range it can drop to? The 20-day, guys. Well, so here's the thing. I didn't catch the short. But for me personally, it depends, one, on what's your time horizon. Are you swinging it short, or was it a day trade? You have to understand how stocks move. What was the thesis behind PSX? The thesis behind PSX was that we had pushed up and were extended from the 20-day. Like, look at the name when it trends, right? What does the name do when it trends? It pushes up, it pulls back to the 20-day. It pushes up, it pulls back to the 20-day. Pushes up, it pulls back to the 20-day. Every time we get really extended from the 20-day, it pulls back to the 20-day. So what do you think your target should be? The 20-day. The 20-day is absolutely where this thing should get to, and then it'll catch a bid, and if it's going to stay in the uptrend, then it'll trend again. So that's how I do that, guys. What do you think about FedEx and UPS? I wish they would handle my packages better. Kind of in no man's land. Maybe spikes back up to 260 for a fade. I could see longs off maybe 238 or whatever, but nothing of interest at all. Like, I don't see any reason to want to trade them for myself. UPS looks a little more clear cut of a short on a pop back to 208, but again, no reason for me to have them on my radar. Remember, guys, there's like so many names in the market that our job is to narrow it down and put just the highest quality things in front of our faces so that we block out all the noise and can just execute where we have a better edge. When looking for a long setup, why did you like MU more than some of the stronger semis like Nvidia that are showing more relative strength? If the market bounces, wouldn't the stronger names bounce more? I think honestly, look at this Nvidia daily candle. This Nvidia daily candle is like what we were talking about with Apple, right? You got this close at the low a day. Like, I feel like these are coming lower. I feel like Nvidia is going to puke to the 200-day. AMD is another one that was really strong. Look at that daily candle. I feel like it's going to puke lower. And if they do, great. And listen, I'm not saying they're not good longs. I actually think that they're all just as valid of a long idea as MU and AMAT. But I feel like the extension low or the extension down has been more extreme in the names like MU and AMAT. I think because let's look at it this way. What did I just say about where to take profits on PSX, right? It's the 20-day. Why? Because that's what it was extended from, right? Because things will usually revert back to their 20-day. So use that concept and look at MU and look at how much room there is back to the 20-day. When does MU ever get this extended from the 20-day without a significant bounce? Now, yes, AMD is extended from the 20-day. I just feel like MU and AMAT have that more extreme look. And the more extreme something gets before a significant relief bounce, the higher the probability becomes that bounce will be significant, right? I mean, I said it a few times, the lower the better. Okay, so the lower the better, because I'm not catching the falling knife. I'm waiting for key levels. You can watch and see the seller's exhaust. You can wait for something to put set risk on. But the more extreme something is, the more there's an edge in taking the reversion. And remember, if we keep going lower without a bounce, the path of least resistance is going to be up. And that's the same with AMD and NVIDIA and Apple and Microsoft and the market. So I'm not saying that NVIDIA and AMD are wrong, but I understand what you're asking. Why MU over them? And that's why they look more extreme to me. KH, you asked me for pins and Baba every week. Both of them. Well, Baba looked a little bit. China's been getting some love, okay? But pins is toast. Like, look at the level it lost. It's probably going to come down here and try to close this gap. There's no reason in my eyes that pins can't get to 25. So, I mean, I'm not here to tell you what you want to hear. I'm just going to tell you what I see objectively. And again, if you're coming to my Sunday preps looking for confirmation bias or looking for someone to coddle you and tell you what you want to hear, you're on the wrong YouTube channel, because that's not what you get here. I'm just going to be objective, guys. Now, Baba, on the other hand, it's gotten some love. Look, higher low, higher high. If we don't lose lows, we could push up. I'm not here to say it can't, but I'm also not going to say that it's out of the woods yet, because this thing is in a perpetual downtrend. Like, if you're trying to long Baba, you're fighting the path of least resistance. And that's what the whole point of this has been about, is identifying the path of least resistance and then going with it. So if you're longing Baba, you're doing the opposite of what I'm saying. Let's see here. I hear everyone always say, wait for A+ setup before you enter trade, but what is an A+ setup? Well, come over to truetrader.net, show you an A+ setup. I'll teach you how to spot those. But I'm not going to take the rest of my Sunday prep to talk about how we trade these setups. I am sick as a dog, guys, and in 10 minutes, my Kansas City Chiefs are about to start romping on these fools. So everybody, stay safe out there. I'll see you tomorrow morning in the market. Remember, path of least resistance.